Manos from Money, Whiskey and Coffee is all in on Rio Tinto. Shout out to Manos from Money, Whiskey and Coffee channel. I will put the link for his channel in the description. Definitely go check it out and show your support. So during our live stream on August 14, we all asked ourselves, what would be the one stock that I would like to own for the rest of my life if I could only own one stock? And Manos went with Rio Tinto.
I took a different approach. So I took the approach of if I could only have one stock in my portfolio and that would be it, would that stock be? So I set out some criteria. It had to be a big company, it had to be well established, it has to pay a dividend because it's the only stock I'll ever hold, and it has to have something that everybody needs even if they don't know that they need it. So my next question was, is it going to be services or is it going to be something physical, like a physical product? Now, services do need physical products in order to be possible, so I went with something physical. Then my question was, is it going to be something like a computer? Is it going to be a car? Is it going to be a phone? Because these are things we need in our lives, in our modern lives anyway. Then I took it a step further and I said, okay, how do you make all those things? And you need to have materials to make all those things. And that's why I chose a mining company. I chose Rio Tinto, actually. And one of the reasons I chose Rio Tinto was actually for tax reasons as well. It's dual listed it's listed in the UK and in Australia at the same time. So any dividends I would be receiving from Rio Tinto, they would not be taxed. If I'm investing in Rio Tinto through a stocks and shares ISA account, if it was a US company, I would have to pay 15% tax on any dividends received. In terms of what they are mining, they're mining iron, which we need iron to make steel for ships, buildings, bridges and all that. They mine aluminium, which we use it for cars and airplanes, heat exchangers. They mine copper. They mine borates that are used to create boron, which is used in fertilizers, and renewable energy and heat-resistant glass that is used on smartphones. They mine lithium, which we use in our batteries. They mine titanium dioxide, which is used in airplanes and airplane engines in particular, and also medical applications like hip replacement joints and things like that. Also in sports equipment, in paints. They also mine diamonds. I don't really care about diamonds, but apparently they are forever. And they also mine salt, but not your typical table salt. Salt is also used in industrial applications to create glass, paper, plastics, detergents, and things like that. I went with Rio Tinto as my only stock pick.
You're saying they're paying 11%? That's a pretty high dividend.
Yeah, it is. It is quite high as a dividend yield. Now, Google Finance says 8.72. Some other sites say something like 10%. Barron's.com quotes 11.08. So that fluctuates depending where you look that company. I have to admit they didn't have a consistent paying track record. They don't have a steady record. They're not like a dividend aristocrat.
It's a good solid company. It's got good track record. It's got good cash flow. It's got good profits. And the fact that it diversifies, that is good for me as well, because, you have different price changes in materials. So yeah, it's got a good plus signs. I suppose if there was going to be one negative, it might possibly be environmental concerns. But as an investor, it's just one of those things you have to put up with it because, you have to mine and, you will have problems. But yeah, it's a good solid company.
That's a good one for the watch list. I'm not familiar with this one. Dividend looks very nice. So yeah.
Looking at their annual financial report, this company generates about $44.6 billion and has an earning of $9.7 billion as of 2020. If we look at the quarterly earnings, their second quarter earnings was $16.54 billion with about $6.61 billion in earnings. Right now, from the analysts, there is a strong buy. This company is about $128 billion company, so it's not a joke. So these kind of companies are very important, but they are not on the radar of most retail investors because it is not a business to consumer company. It's a B2B company. A lot of investors that are not able to see the end product, they generally don't invest. So a lot of opportunities are in B2B space, the enterprise space when it comes to software, and that's where a lot of opportunities are there. So you should definitely keep an eye out for these kind of opportunities. Also remember that this is a dividend paying company. The dividend yield is about between 8 and 11%. There are some discrepancies because Rio Tinto is listed on New York Stock Exchange, London Stock Exchange, and Australia Stock Exchange. Currently, I'm showing you the price chart of New York Stock Exchange, which is $79.44. Looking at their price target right now, this stock is below its 50-day, 100-day, and 300-day moving average, which is right at the bottom peak of the Bollinger Band. The RSI has dropped to about 39, so we are looking at that it is getting into that oversold territory. There are only 3 analysts that are covering Rio Tinto, at least on tip rank, and what we see right now that there is a 2 buy ratings and 1 sell rating. There's a $105 price target on Rio Tinto, which is about 33% from here on. Now, is Rio Tinto on your watch list? Let me know in the comment section below. Now, if you got any value out of today's video, don't forget to hit that like button, click on subscribe, and ring that bell notification. I'll see you next time, my investor family, but don't forget to invest for tomorrow.